Righto, let's talk about Scottish drinks then. A year ago, almost, it was actually back in last July, I said I reckoned I could see my way to 30% higher AG Barr share price by 2026. Back then, it was £6, pretty much exactly, or at least that's what I meant when I said 30% higher. It was close to that level. And so I was looking for £7.80 by 2026, and I figured I had left, and I meant by that some point in 2026, about the middle of 2026, really. And I'd left myself a bit of what I thought was kind of room for manoeuvre, with a rising dividend and revenue growth that I hadn't really factored into my models at all deliberately, to give you what I thought was a fairly conservative estimate. Well, we're now at £6.75. Which is not bad over the last year or so. It's 10% plus a dividend of a couple more perhaps, so it's not terrible. And if anyone bought the stock back last July, you've probably done okay. Not blown the doors off anything. It's certainly not gone backwards. So let's have a check in on the underlying business. And when I had a look at their H1 statement, I thought this was doing actually very well in terms of my investment thesis. And that worried me as to exactly how well it was doing. It seemed to be doing almost too well, especially given that the share price is nowhere near where I'd forecast it to be. So the latest update said revenues were up 228 million, which was had reached 228 million for the half, which was 3.1% growth, which is not spectacular, but also not what I was building a thesis around. What I was really interested in was the idea that their integration boost from 2022, I think they spent about 20 million on that, was starting to take shape, and operating margins were going to start to recover to back where they were, which was somewhere in the region of 14.5%, which is what the company had been guiding for around the time I was giving you this investment idea that I was considering. Well, earnings per share have now reached 24.9p again for the first half. That's a 25% increase, and the main reason that the earnings are up 25% while the revenues are up 3% is that operating margins have indeed widened quite significantly. In fact, they've gone from 13% adjusted basis to 15% adjusted basis. That's fairly good. In fact, it's ahead of where I was aiming for with my 14.5% margin expansion by 2026. So, look, well done, AG Barr, probably. We'll come back to the probably bit in a moment, but on the face of it, they said they were going to get margins wider, and they got margins wider. Slightly wider than they expected to, and slightly quicker than they expected to. And if you were like me and thinking about this in the context of, I think this is a margin expansion story, you hard to argue with that. In many ways. So, why does that give me a problem? Well, it gives me a problem for two reasons. One is that widening margins was only half of my story. I was thinking this would generate pretty significant earnings growth, and it has generated pretty significant earnings growth. It generated 25% earnings growth. I thought from that, based on where the stock was trading, which is a PE ratio of around 18, that would result in higher multiple, because the thing was growing earnings at that rate to around 20, but it hasn't. It has done the opposite, and the market hasn't, to some extent, fallen for that trick, which I think is probably wise. It's currently trading at around 16%. The market was not super impressed by the H1 report, and I can see why. Revenue growth of 3% is not terribly inspiring. Here, and that's where the long-term action is going to come here. If you think they were previously guiding for 14.5% operating margins and you've now got 15%, I think it would behoove you to think there's not a huge amount more to be got from this in margin terms. You don't have to think it's all over necessarily and nowhere else to go from this point, but you do have to think most of that growth story has now been pretty much exhausted fairly conclusively, and that means you're not likely to see huge amounts of growth coming from there in the future, which means you should start looking at other sources of growth, which are revenues, and they're 3% up, which is much more like a 16 times earnings than a 20 times earnings stock. So I get it, and that's fair enough. And I had one other source of concern as well, that was as far as I got in my thinking yesterday when I was writing this up, and that was all the words I had room for, and I think I was writing down as well, so I left it there. I was also then reminded myself of something that you said, Steve, when we looked at this back, I think it may have been a year ago, which was that their CEO, who was new at the time, has a bit of a bean countery vibe about him. He's a guy called Ewan Sutherland. He'd previously been in charge at Saga Superdry and Co-op, which are not known for their drinks manufacturing facilities, particularly. Actually, none of them is known for being terribly successful either. But you pointed out immediately that they brought in what appeared to be a bean counting CEO, and he'd immediately done a bean counting thing, which is whacking up the dividend in this case, because they had room to do it. So, okay, fair enough. But I guess there's a danger that he's not a drinks guy, and if you're worried that you have a finances minded rather than operations minded, let's say, CEO, and to the point that he's got no operational background in this kind of company, you immediately become concerned that you can widen margins by cutting things like marketing spend. And if you widen margins by cutting things like marketing spend, that will ultimately probably weigh on long-term sales growth. And what you're seeing is unimpressive sales growth. Not saying that's necessarily what's happening here, and you can't really get it from the results in these cases, but I think it's well worth a closer look to see what's going on this, especially going forward. And part of my reason for thinking that is because they've managed to blaze past what was their margin expansion target for 2026. And you sort of wonder, what is it exactly? What costs have we managed to cut that we weren't thinking we could cut? Because we've got there very early. And I kind of wonder in this situation whether we might have pulled out something that we need for the longer term. That's a slightly speculative and slightly cynical view of things here, but it does kind of give me pause here. If I was not expecting the number to be that high, and I kind of wonder whether it might be a bit too good to be true here, Steve. The market doesn't seem to have much of a positive view of this thing either. It's trading at around 16 times last time I looked. But what do you think, Steve?
So there was a number of things that jumped out of me that are small problems, I would say. The Funkin' Cocktails is not growing. That was not very impressive. This half revenue is down about 5%. They say in the report that they're targeting some of their drinks range to sort of Gen Z kind of people, and evidently that is not working at the moment. Rubicon, which is one of their bigger drinks, it was only up about 1%, and Iron Brew was pretty much flat. So that was kind of a little bit worrying, really. They're expecting Iron Brew to have a better second half, and that'll be because people are making Iron Brew gammon, Steve, like I did last year, and that takes two 4-litre bottles of Iron Brew, if I remember correctly. There was an acquisition in there as well, Steve. 50.1% stake in A Essence, and they own Raw Hydrate, which is like a strange watery kind of I don't know, like a watery juice thing, which has got electrolytes in it and stuff. I think they're all watermelon based. I remember, if I remember off the top of my head. But the other thing that this Innate Essence own is those little turmeric shots that you've probably seen if you've gone for any kind of meal deal. There's about, I don't know, it's probably like a 50ml bottle, and it's kind of yellowy, and it doesn't look. I mean, I'm not a huge turmeric fan, so it's not something I'm going to rush out and buy. And I just don't know, Steve, if that's going to be a great thing. But yeah, I think they've had the quick wins, is what I would say, is the sort of overarching point of this report. He's been counted his way to his quick wins, and now he's got the hard miles to come. So revenue is up 3.1%, volume up 1.1%. That's positive enough. The issue you've kind of got moving from here is that if you're going to cut your marketing budget, Steve, like you say, growth becomes harder to achieve, especially when you're trying to push new products onto the market. That can lead to an overcorrection. That can lead to a profit warning, and then it all gets a little bit sticky from there onwards. I'm remain on the fence with this one, Steve. To be honest with you, I think I've been on the fence every time we've ever spoken about it. I just think it's interesting, but not really something that I would chase after. I'm not sure this acquisition is the right stuff. There's also a bit of an earn out kind of bonus in there as well, for Innate Essence, which could be another think it's like another 2 million, or it might even be 20 million. I can't remember where I read it now, but yeah, if they hit some profit and revenue targets, it's a big uplift in the sort of price they've paid to get into this, and obviously that'll mean that the return on the investment might be disappointing, especially from a shareholder perspective. But other than that, I think it's fine. It's doing fine. But yeah, not something I'm in a rush to go out and purchase, Steve.
No, speaking of being in a rush to go out and purchase things, I saw they've bought the turmeric drinks business because I flagged this to a friend of the show who came on and did an interview with us, James Fox, and I thought there might be an opportunity here for him to try and seize a moment with his sumac drinks business and flog that to them as well. Because they've got cash, this company at the moment. Their idea of a big acquisition, and hey, these things are all relative to company size and so on, was a 20 million Boost acquisition back in 2022. And they were saying around a year ago that they sort of see this as a kind of iterating cycle process of acquire and then sit tight and then integrate and then repair margin and then acquire again and then integrate and repair margin and then acquire again. And that's their kind of plan for, well, I guess long-term growth in their case. Margin's now repaired, and bear in mind that was under a different CEO, so it may have changed here, and justifiably so. But they're now sat on around 50 million in cash, I think, which is more than twice what they spent to acquire the Boost line of stuff. So I sort of wonder whether they're in the market for another acquisition in the near future. Not necessarily, I mean, a bigger one than the one we sketched there with Innate Essence, but I wouldn't be surprised to see them get active there and look for growth through that kind of mechanism, which would, I think, be interesting. Outside of Simaqua, James's company, I don't know quite what I'd like to see them have a swing at in the drinks market, but yeah, be interesting to see how they go. But my sense is that I don't see anything particularly exciting on the horizon. Do you have any ideas?
No, but I have just looked. I thought, who owns this raw hydra and turmeric company? Who was the founder? And it was Thomas Hal Robson Canu, who used to play for Reading. He was the guy who founded these two companies. So he said that our mission has always been to unlock the secrets of nature's pharmacy. For years, our turmeric shots have been an anti-inflammatory savior for people from all walks of life. Now we're uplifting the hydration game with a brand that utilizes the power of pure watermelon. Get ready to feel revitalized. I don't think he said that. I'm fairly certain that they're not his words, but yes, it's quite comical. Yeah, I guess we'll see. Kennedy would like it. It's kind of his kind of thing, this, isn't it? Turmeric and watermelon.
Yes, he's
But
big
we'll
on the
see.
power of pure watermelon, as he's constantly saying. I don't know how we individuate walks of life, Steve, but if we assume loosely speaking that you and I come from different ones, I get that in a broad sense we don't, but if you be quite specific about it, we come from different ones. I strongly suspect that neither your walk of life nor mine has been anti-inflamed or whatever else by turmeric shot recently.
No, I try to avoid it at all points because my main issue with sort of turmeric is that if you spill it on anything clothes wise, it will never ever come out. We have white worktops in the kitchen, and if you get it on the worktop, it won't come out. So it's always sort of the bane of my life whenever any recipe has it, and you like sort of begrudgingly get out of the cupboard, and you're like, oh, this thing tastes like soap anyway, and then I've got to put it in the food, and all it does is dye it yellow. It doesn't do anything else. So that's my general take on turmeric. I cannot imagine for the life of me I'm going to see the people of Hull take up turmeric shots in any kind of great deal, and I will stretch that out to the UK. I just can't. I can't see it, Steve. I didn't. You know, the recent march that was around London. I didn't see many people with a turmeric shot. Or it was mostly Carlsberg and Foster's. So yeah, I just don't think it's going to be a hit, Steve.
We'll get on to one more smarter, perhaps, bit of M&A in just a moment, but I will say, I think Mr. Hal Robson can have missed a trick, because the people that hold the record actually for paying the most for any turmeric ever in humanity, I think it might well be me and my wife, because we bought some fresh stuff in a Turkish market once, and I think the guy was kind of expecting us to haggle, and one of us, I won't say which one, did haggle briefly, and then we settled on a price, and the guy then, having kind of agreed that price for the turmeric, then said, oh no, you better have all this other stuff as well, because people will think I'm ripping you off if I charge you that for this actual turmeric. So I think probably that's the highest anyone has ever paid for that quantity of turmeric. I don't remember how much it was. I remember it lasted forever. I don't remember how much it weighed, and I don't remember what we paid and what the exchange rate was at the time either. I've kind of eviscerated it from my memory, but if the man wanted someone to go and overpay for some turmeric, he probably should have got onto us rather than the good folks at AG Barr.
I thought you were going to say he sort of turned around to the building behind him and just started grinding the render into a bag for you. That's what I thought you was going to say. But no.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.